Monday starts silver's nosedive down to $40, $35, $30. Silver stackers are eyeing Monday and they're bracing for what could be a major correction. Dealers and markets are flashing red. Check this out. If you're interested in silver, click that link in the description. Money Metals is holding this contest. They're giving away 20 Silver Eagles. Every month they hold this contest. Last month, Kevin from Kentucky took home a 10th ounce of gold. Click that link down below. You should be the next winner. Take home that silver. Now, check this out. The best way to understand this is to look at what's happening in the paper silver market, the ETFs. Over the past few weeks, silver exchange traded funds like the iShares Silver Trust, SLV, they've seen holdings drop by 19% from their mid-August peak. 19%. That's not small. ETF outflows of this size mean big investors are dumping exposure. Historically, when ETF holdings slide more than 10% in a short window, it almost always precedes a major correction in a spot price. We already saw this start last week, and it's going to continue. Look, back in 2013, when ETF holdings began to fall, silver plunged, listen to this, from $28 to $20 per ounce. That's a big drop. Today we're seeing the same setup again. ETF outflows, weaker retail demand. That means stackers are not buying, and I include myself in this. We're standing on the sidelines. Dealers are saying they're getting more sellers than buyers. The last time this happened, silver lost over a third of its value before finding the floor. A third. If that pattern repeats, silver's first stop could be 40, with further room to slide if the data confirms economic growth later this week. Now, check out the price action. The clearest signal of all, after hitting a record high of $54 an ounce, silver has already dropped more than 6%, even a little more. And that might not sound catastrophic yet, but here's the problem. Every rally peak since 2011 has followed the same false top pattern. That's what we call it, a false top. It's a euphoric breakout. Everyone's feeling that. But it's followed by a quick 5, 10% pullback, and it snowballs into a much bigger correction. In 2020, silver hit $29. It fell 9% in a week, and then slid another 20% before finding its support. Those are just massive drops. So what we're seeing right now, the sharp price fade, ETF outflows, lower retail buying, that mirrors the setup just perfectly. So dealers say buyback requests are up double digits. Well, we also see that with premiums. For physical coins, they're going to start to shrink. And it's a sure sign that this frenzy is starting to cool off. I mentioned ETFs. Well, the SPDR Silver Shares Fund, it's seen its largest week of redemptions since 2021. And when the crowd that chased silver up starts running for the exits, it creates a feedback loop. Falling prices cause redemptions. It triggers more selling pressure, and it drives prices even lower. And here's the really frightening part. We're actually seeing a softening in global demand. It's 2%, but it's softening. And that's not what we want. We've been riding the wave of industrial demand, getting us up to this $50 level. The last thing we want to see is any softening. That it doesn't mean that the markets are completely dead, but it means that we have much more downward pressure than momentum going up. If you've been standing on the sidelines for the past 3 weeks, you might be ready to jump back into that local coin shop, because the price of silver, with all these signs and all these moving pieces showing us, that price of silver is headed down to your buy price. And get your own silver, click that link in the description. Thank you, Money Metals Exchange, for sponsoring this channel. It's a great contest. Every month they're giving away 20 Silver Eagles. 20 Eagles every month. Click that link. Be the next winner on that list. Take home that silver. And I'll see you on the next one.